Hello, and welcome to the New Trader's Playbook, Episode 1, Anatomy of a Candle. I am so glad to have you here today. As a small introduction, my name is Shannon, and today we are going to be talking about the basics. Any of you that happen to be watching this video are probably interested in learning a little something about what it's like to trade in the stock market. It's definitely not easy, but I do believe that one of the most important things to do is keep it simple and return to the basics. So today we're going to be talking about those basics, which are going to start with the most important thing that you're going to know here at the beginning is what a candle is. When we think about the stock market, regardless of what exposure you've had to the stock market, whether it's trading or investing or just seeing it on the television when they happen to talk about it, there's one thing that they all share, and that is candles. So today, for this episode 1, we're going to start at the very beginning with the anatomy of a candle. So let's take a look at two different kinds of candles. So what we have right here in front of us is what you probably would think of as just a basic red and green candle. So we need to identify some basics about this. Now, typically, when you see a red candle, you're going to refer to said red candle as bearish. And when you see a green candle, you are going to refer to that candle as bullish. So we've got green for bullish and red for bearish. Fantastic. Now, usually what this means simply is that red candles are often going down, price is moving lower, and green candles, price is moving upward. There are a lot of more nuances to it than that, but we're going to keep it simple for right now. Red down, green up. Now, there are some very important points that need to be talked about when it comes to learning about the anatomy of a candle. There are 4 very important locations that you have to be acquainted with, and they are often referred to as O, H, L, C. Now, as just letters, they mean absolutely nothing to us. But when we add in the features that explain what each one of these are, we get a little bit better idea on what is the most important parts of the candle. So O stands for open, high, low, and close. These are the essential bits and pieces of a candle that you're going to need to know from now, if you're a beginner, if you're intermediate, even if you're advanced. This is what runs the market, understanding the open, high, low, and close of each candle. So let's talk a little bit about what that looks like. When you have a red bearish candle, that means that the candle opened at the top of what we call the body. So we have a red body and we have a green body. In addition to that, we also have these things that poke out on both sides, which we call wicks. Okay, so bodies and wicks. Let's take a look at that. Open here, and then price goes up until it hits its high, and then price goes down until it hits its low, and then pulls back in and hits its close. So that is where you get OHLC, open, high, low, close. Now, for green bullish candles, of course, it's going to be the other direction. We're going to get our open down here at the bottom of the body. Then price is going to come down to the low, go all the way up to the high, and then pull back down into the close. Now, the reason why this is so important is because it shows us a story. There is a narrative behind what's happening inside of any given candle. And in order to understand how price works, because we're going to be digging a little bit into what's inside of these candles, we have to understand where do they start, where do they go, where do they finish. I want you to think about what's happening here, because the anatomy of a candle is extremely important. Take a look at what would happen if we were to, let's say, run through how this candle was created. So we started here, then price came down and it hit essentially a brick wall, so to speak. Then price came up, up, up in some capacity until it hit another brick wall. And then price came back down and eventually closed right here. That is extremely important to understand. So I want you to keep that in mind. Open, high, low, close for bearish candles, or open, low, high, close for bullish candles. Fantastic. Now, the cool part about this is that it works in many different ways. So we don't have to say, oh, well, what about this time? What about that time? Well, actually, what we'll see here is that all time frames are made up of OHLC. All of them. It doesn't matter if you're on a 1 minute, a 5 minute, a 15 minute, a 30 minute, 60 minute. If you're on a 4 hour or 1 day, or maybe a 1 week, 1 month, or goodness, for all that matters, it could be 1 year. Right? So any of these are applicable. We want to make sure that we understand that the market is strong in the fact that it runs around these structures. Doesn't matter what time it is. We'll talk a little bit more in a few minutes about how time is important. But from here, let's take a look at a couple of types of candles that are just important to understand. So let's take a look at a couple of different types of candles. We are essentially looking at two things. The first one here is what's called a Maribozu. The name doesn't matter, but I like how it sounds. And a Maribozu is a definitive sign of strength. Why is it a sign of strength? Because think about how the candle was formed. What happened in the process for this candle to be made? So we started here and the candle opened. And what did it not do? It did not go up, because what are we missing? We're missing the wicks, right? So price came straight down with force and actually closed on its bottom. So what you'll notice is your open and your high are the same, and your low and your close are the same. Lots of strength to the downside. Now, does that mean that we're automatically going down and we don't have to worry about, coming back up? No, it's not what that means. But usually when you see these, which is rare, it means that the market is trying to tell us something. It's trying to direct us and tell us that it wants to continue pushing the pressure down. So we may need to take that into consideration. Now, with that being said, this other candle type, which also is not super common, but they are very important, and these are called dojis. A doji, as you can tell, is a candle that has these two really long wicks. And usually what we end up seeing with the dojis, which when they're really nice, we end up seeing these dojis that have this small body, right? Because that's really what we want. We want the body to be tiny, right? So maybe it's something like this. They have these small bodies and these long wicks. So what does a doji represent? This is going to represent indecision, right? Because, well, technically we don't know whether price decided to go up and then down, or down and then up. But essentially what happened is that price decides, here we go, and then we go up here, and then we come back down. So what you'll kind of see, if you think about this, is that it's kind of like painting. Essentially, it is running the paintbrush up and down, up and down. And what do you usually do when you're painting a wall? Well, you may do one stroke, but the paint might have not been thick enough. So we have to come back down and do another stroke. And that is something that you're going to see a lot in the market. You're going to see price writing over itself and kind of filling in the blanks, so to speak. And that is one of the main features that we'll talk in a few episodes about how price is going to describe or explain itself to us, so that we can get a better idea of which direction we need to be going. But candles like these, as I mentioned, aren't super common, but they definitely tell a story, and we have to be able to see the story before we can be able to get into the market and try to trade. Now, there are a couple other types of candles, as you can see right here. We're going to look at what it depends. Some people call them a couple of different things. So sometimes you'll hear them as hammers, or you might hear them as something called a shooting star. It really depends on how the candle was created, what happened before and after. But once again, the names are superfluous. They don't really matter. All that it shows us is very similar to our Marubozu, that price decided to start right here, go up, hit that wall we were talking about, and then get pushed right back down and stop on its low. So we have our we have our open, then our high, then our low, which is also coordinating with the close. Same thing over here. Open, low, high, close. So these candles are signs of what? What do you think? Are they signs of strength or are they signs of indecision? Yeah, they are definitely signs of strength. Why? Because think about what's happening right here. Price is going somewhere and then leaving that area quickly and pushing its way down. Very similar to the way the Marubozu works, but just with a little bit easier to see type of vibe here, because what's happening is price has hit some kind of level here, and it's told the market, hey, I want to get out of here fast and let's move. So it's making a very strong shift and flip in price direction. So these are really good to look out for in saying, oh wow, look, price reversed. It turned around, turn around almost instantly when it hit a specific area. You're going to often see these types of hammer, shooting star type vibe candles, and they're going to oftentimes mean, not always, as I mentioned last time, not always, but usually they will mean that we are seeing price shifting into a different direction. Just keep that in mind, that you're getting this pressure in one direction. And oftentimes that's telling us that maybe we are done down here and now it's time for us to look in a different direction. Now, keeping in mind with this type of structure, we may end up seeing something like this. Let's say that after the candle closes, we end up getting another red bearish candle. So what is that? We're getting an opening, then we get a high, then we get a low, and we get a close, right? So what is that telling us? Well, it's kind of telling us, if we draw it out, that price was pushed up and then down and then pushed up again and then down again and up, and it closed, right? So there's some pretty important information about where price decides to stop that we need to remember. That's why open, high, low, and close are so important. Your highs, your lows, sometimes they are quote unquote brick walls. Brick walls are important areas to remember in price. Sometimes they get run over. This is all about understanding that the market is not random. It's not at all. If this is the first time you've ever heard this, welcome to Trading 101. The market is run by algorithms that make things very clear. And the longer that we talk about this in following episodes, you're going to find and see a lot of examples that's going to prove to you how not random the market actually is. Now, let's take a look at something interesting in this candle right here. So let's just make an assumption that we are looking at a 60-minute candle, okay? And what that means, if you're unfamiliar, is that this candle from the open to the close represented 60 minutes of time. Now, inside of that 60-minute candle, there's a lot that's happening. So let's say that price starts right here. So I'm going to just draw a couple of little small tick lines and imagine that this is what's happening inside of the candle. So price is making its way up and down as it moves its way to whatever destination price wants to be. And after the 60 minutes is over, then we are able to see that price will stop here, and that would be the end of the candle as opposed to said beginning. Okay, so let's say that in this specific scenario, what we're looking at on this side is a 1 minute set of candles. So obviously I didn't draw 60, but what you're seeing here is this 60-minute candle was represented by 60 1-minute candles. Now, of course, there is a story just looking at the 60-minute candle. We know that the candle starts here, goes down, continues, hits that brick wall, pulls back, and then closes here at the end. So let's say, for example, 60 minutes are usually the start of the hour. So we would have, for example, 10 a.m. was right here. And when the candle closed, it would be 11 a.m., for example. So inside of that candle was all of this price action that represented the 1 minute chart, for example. Now, with this in mind, there are two important concepts that you need to be familiar with, and they are usually described by using HTF and LTF. What do those stand for? Well, they represent high time frame and low time frame. So, important to note that there are no specific high time frame, low time frame charts. It just depends on what you are doing and how you are trading. For example, let's take a look at a couple of different types of traders. So you could be a scalper, and usually scalpers are going to be the kind of people who stick around the 1 minute chart. Sometimes they're even going to go down to a 15-second chart. I do not suggest it. It's wild down there. Then you have your day traders. And your day traders are the ones who are maybe going to be using sometimes the 1 minute, but usually they'll use the 5, the 15, maybe up to the 60 minute. Just some basic ones. And yes, there are ones all the way between there, so you can see a 3-minute chart if you'd like. Then you're going to have intraday traders. And these are ones who are okay with holding overnight, which is different from day traders because day traders do not want to do anything other than take trades today. Scalpers want to take trades in the next 30 seconds. Day traders are okay to hold maybe for a few hours. Your intraday traders are going to be holding for a little bit longer. So maybe they're going to be using a 4-hour or a daily chart. And maybe something that is familiar to the audience would be your swing traders. And swing traders are usually going to be more on the side of investing. So they might be looking at daily, weekly, or monthly charts, okay? Now, there's a concept that is really important to understand when it comes to the market. And that concept is that all price is fractal. Okay, well, what is fractal? What does that mean, anything? Okay, so fractal is a really interesting word. What it means is that it does not matter which time frame you've chosen to trade. The time frame is only dictated, it only dictates how long you'd like to be in the market. So if you want to be in the market for a very short period of time, you will choose lower time frames. If you want to be in the market for a very long period of time, you want to invest in something and maybe hold it for months or years, you're obviously going to be more interested in larger candles. But the interesting part about it is, once you learn the basics of trading, everything is the same. Now, what do I mean by that? Well, when we drew this out, what we saw is that this was a 60-minute candle that had 61-minute candles inside of it. And if you look at the 60, you'd see this. And if you look at the 1 minute, you would see this. But we could just as easily do this. Now, of course, there are not 60 days in a month. You may get about 20 or 22 days in your month. But The point is, they will look the same. It will be the same because price is fractal, which means that you can always rely on what you learn to use it to trade in any time frame. So with that in mind, that allows us to do a lot of things. That allows us to say, well, what kind of trader do I want to be? What amount of time do I want to dedicate? Do I want to be able to hold trades for longer periods of time because I can't be in front of the computer all the time? Or do I want to be someone who learns my trade to the point where I can come in, look for a trade in 60 minutes or 2 hours, and then get out of the market? These are the kinds of decisions that eventually down the road, if you decide to dip your toe into the trading market, you're going to find are very important, but also it does not matter what time frame. All that matters is that we understand the anatomy of what is inside of the candle. That's an extremely important key, and we have to be able to think about how a candle evolves. So I want you to think about that. How does the candle evolve? I see this 1 month candle, but what happened inside of that candle? Because that tells you the story that allows you to take those trades that will help you to make money. So that is the end of episode 1, the anatomy of a candle. Thank you so much for listening. And please, if you like the content that you heard today, like and subscribe. More videos will be coming out and many more in this beginner series. So lots to look forward to. Thank you so much for listening, and I'll see you in the next video.